Good afternoon, everyone. I'm Namita Vahi. I'm a senior fellow at the Center for Policy Research and director of the Land Rights Initiative. And on behalf of the Land Rights Initiative, I'm very pleased to welcome all of you to the eighth talk in our Legal History Speaker Series. The Legal History Speaker Series is one of a series of events that we have launched to celebrate the 10-year anniversary of the Land Rights Initiative. Land Rights Initiative turned 10 in November, and we have had 7 talks before this reflecting on the legal history of various legal issues that affect the lives of all Indians today. So, why did we decide to do a series on legal history as part of the 10-year anniversary celebrations? The reason was because all of our work at the Land Rights Initiative on land acquisition, land rights of scheduled tribes and scheduled areas, health rights and water rights, property rights, all of our work has a legal historical lens in order to understand issues in the present, and including our flagship project, the Mapping Indian Land Laws website, which is the first ever interactive exploratory archive of all land laws in India. We have currently 500 laws on the website, of which 150 are colonial laws and 350 are post-colonial laws, which again shows that there are significant continuities between the colonial and the post-colonial period. And there are many laws that affect our lives today, which were not enacted necessarily by us because they have been, and also while there are these institutional continuities, there have also been significant moments of rupture and transformation in our legal landscape. So one such moment was the adoption of the Constitution of India in 1950, which turned all Indians overnight from being subjects of the British Empire to citizens of India. We've just celebrated our Republic Day, and in the after the parade is over, really what the republic is really about is the fact that we, the people of India, have given to ourselves this constitution, which guarantees to all citizens rights in part 3 of the constitution, and also imposes obligations upon the state in part 4 of the constitution, which includes certain directive principles of state policy. And within those principles of state policy, there are many, obligations upon the state to ensure that everyone has a basic standard of living, that all material resources of the community are distributed in order to best subserve the common good, that there is no concentration of economic wealth and power. And this relationship between citizens and the sovereign state is really what sort of has been demarcated in these parts of the Constitution. Of course, there are other parts of the Constitution. For example, the work that we have done on the scheduled areas, which talks specifically about certain groups of people and certain areas. But the broad sort of liberal democratic constitutional compromise is enshrined in these provisions. And one, when we talk about the sovereign power of a state, there are 4 powers that are inherent in a state's sovereignty. And the first of these powers is the power to conduct foreign relations. We have had a series of talks this month on India's relationship with its neighbors, India's foreign policy. In fact, we had a talk this week. The second such power is the power of eminent domain. And at the Land Rights Initiative, that is the power on which we have done, or that is the sort of understanding the power of eminent domain is where we have done all our work on land acquisition, on land rights of scheduled tribes, because the power of eminent domain allows the state to take away individual property for the common good. The third such power is the power of taxation, and that is what we are going to talk about today. The fourth power is our police powers, and we talked about police powers in our second talk, which was on criminal laws, because we have had a revamping of the criminal code itself. And actually, we are in a moment in history where we are seeing, in our Indian history, where in the past decade, we have seen revamping of a lot of laws that were sort of had been around for a long time, like the criminal laws had been there from the colonial period pretty much, with some amendments in the post-colonial period. Similarly, with the taxation structure of India. And, the tax powers and the eminent domain powers are very closely connected as well, because both are used in order to fulfill the state's responsibilities to bring about economic development, as well as to ensure social redistribution. So one way in which governments often generate resources to carry out development projects, as well as try to redistribute income and resources in society, is the power of taxation. And that is why we have gathered together to talk about tax law today. This is the first in the legal history series where we are talking about tax law, but hopefully it's not the last. And, within taxation, there is the oft quoted remark by Benjamin Franklin that there is no certainty in life but for death and taxes. So, one way or the other, even if everybody is not paying what we call direct taxes or income taxes, everyone is paying indirect taxes, of which the goods and services tax is one such tax. And talking about transformative moments where things are there are these continuities between the colonial and the post-colonial period. The colonial state was also taxing. What was this colonial state taxing? Primarily agricultural taxes and so on. And the post-colonial state, as we embarked on a project of rapid economic development, which was premised on capital formation, industrialization, and planned development, urbanization. So, the kind of taxation that happened in the post-colonial state also changed. And so we have these two types of taxes, direct taxes and indirect taxes. And, when we adopted the goods and services tax, it was considered to be a sort of watershed moment in terms of revamping India's economic infrastructure. I mean, when Prime Minister Narendra Modi introduced the goods and services tax bill in Parliament, he likened the moment to the moment when the Constituent Assembly first sat together on 9 December 1946 to start debating the Constitution, which was going to basically create the framework for us governing ourselves. So momentous was this transformation that happened. And we had a talk last year by Mr. Rajiv Ranjan, who was a special secretary to the GST Council, talking about the challenges that the GST Council has faced in terms of streamlining and rationalizing the tax structure. And yet many people, even though there's been this momentous change and all Indians are paying indirect taxes, most people the law is quite complex, and most people are not even aware of how they are paying GST. And, in certain cases, especially in the services sector, people are not even aware that GST is applicable to them many of the times. So it is in that context, this talk becomes so important for us. And, just to give you a sense of how important indirect taxes are. So according to, according to government data, less than 2% of Indians are paying income taxes, but all Indians are paying some or the other form of indirect taxes. And according to a report by Oxfam in 2023, speaking to the role of taxation in sort of redistribution and, dispelling concentration of economic power, the poorest 50% of the population with 13.1% of the national income pays 64% of the total GST. The middle class, which is 40% with 29.7% of the national income, pays about 31% of the GST. And the top 10% of the population is only paying, with a national income of 57%, is only paying about 4% of GST. So we have had this transformative, law that has come into force, which was supposed to rationalize, simplify tax structure. When the Prime Minister introduced it, he said it would be a boon for the poor. And yet there have been many issues with the functioning of the law. And there is research, of course, the Oxfam report has been criticized by many as well, saying that the data may or may not be accurate. So there is a lot of contestation around this area. And it is in order to demystify this complex area of law that we have with us. And it is my great pleasure and privilege to welcome amongst us Mr. Sandeep Chilana. Mr. Sandeep Chilana, or Sandeep if I may call you, specializes in tax laws with focus on strategic planning, advisory, and litigation services in the areas of income tax, goods and services tax, customs, excise, service tax, value-added tax, state excise laws, and foreign trade policy. A lot of these taxes were earlier the indirect taxes that were applicable that have now been replaced by the GST. Prior to setting up his own practice at Chilana and Chilana Law Offices, which is a niche tax advisory and litigation firm. Sandeep worked with and led the indirect tax practice of Shardul Amarchand Mangaldas, India's leading law firm for commercial laws. He was there for more than 18 years. Shardul, for those of you who are from the legal field, would know that Shardul Amarchand is, before this split, was the biggest law firm in India and maybe still is. And all of us, have had some or the other experience with, Shardul Amarchand. Um, Sandeep is well recognized in the industry as one of the thought leaders on GST laws and has successfully advised various domestic and multinational clients on implementation and transition issues relating to GST. He's also part of various expert committees of business chambers on GST. He has in-depth experience in advising various domestic and international clients on a critical array of tax issues, including tax structuring, tax advocacy, and policy, especially negotiating fiscal incentives for greenfield projects. And he represents a number of clients on complex tax litigation before the High Court, the various High Courts of India and the Honorable Supreme Court. He has worked extensively with clients across various sectors such as oil and gas, automotive, information technology, infrastructure, telecom, healthcare, and not-for-profit organizations, and has been extensively quoted in leading business and legal publications on various tax-related issues. Sandeep has been with the Bar Council of Delhi since 2005, and he studied law at Campus Law Center, and he did his bachelor's degree from Kirori Mal College, which when I was circulating the invite of this talk, I learned that he is an excellent actor and theater enthusiast, and that he was, part of the theater group at Kirori Mal College. And when I was chatting with him right now, he said that was actually his primary passion. The law was a secondary one. But in my own personal experience with him, he's a brilliant lawyer who, some people are good in their areas of practice. Sandeep, you can go to with any legal question and you will get the answer that you need in terms of how you should think about the law. And I think that's a skill that very few lawyers have. So it is our great pleasure and privilege to have you with us.
Thank you so much, Namita. Thank you. The most uncomfortable part about these talks is when your profile is being read out. You don't really want to listen to it, but you have to. Thank you so much for having me. First of all, congratulations on these talks that you're organizing. Very informative. I personally heard a few of them. And what a lovely institute that you have here. I am very happy to be here and be part of these talks. So today, the idea of the talk is to understand the background with which India moved to GST, the challenges that we had when we were planning to move to GST, how the GST has worked till now, and where do we see it going from here. Before we actually move into the nitty-gritties, I think the first important aspect, specifically keeping in mind the background that Namita you said with respect to Oxfam report, etc., is to understand what is actually indirect tax, because GST at the end of the day is an indirect tax. Unlike direct tax, indirect tax is that levy which is effectively paid by an intermediary to a government, someone who is selling goods or services. But the burden of such tax always falls on someone else, which is the consumer. At the end of the day, in a value-added mechanism, the end cost of these indirect taxes are always borne by the end consumers. And therefore, a lot of tax policy advocates have always considered indirect taxes as regressive taxes because they do not differentiate between rich and poor. A rich or poor buying a loaf of bread always pays the same amount of tax, and that's how indirect tax works. So, in India, primarily, there is a lot of history around indirect taxes. The initial taxes, as we know today, have existed not beyond the colonial era. In fact, in the pre-colonial era, Mughals, and in fact, prior to that also, we did have some form of taxes in form of land revenues, etc. But the modern form of taxes started to come into India, including the tax administration during the colonial era, when the initial form of custom duties or excise duties or duties on manufacture were introduced. Now, the current structure of taxes that we have, or at least the current structure of taxes that we had prior to introduction of GST, primarily is on account of how the law developed from Government of India Act 1935, where for the first time the power to levy taxes was divided between the center and the state government, or provincial governments as they were called at that point in time. While all the broad-based taxes such as customs duty, excise duty were kept with the central government, more local taxes, specifically sales tax, tax on liquor, and other similar local taxes as professional tax was left for the provincial governments to be levied and charged. Post-independence, when our constitutional framers were finalizing the constitution, this division of power was retained from Government of India Act 1935, obviously with minor alterations. But this federal structure of division of taxes or division of power to levy tax was retained, wherein the primary source of taxation in form of customs and excise remained with the central government, but the taxes on sales of goods, etc., remained with the state government. And it is with this constitutional framework that we moved ahead in the post-independence era. Obviously, because we were a nascent nation and we had less experience of how these taxes would work, respective governments introduced their taxes, including customs duty on imports, excise duty on manufacturing of goods. Sales taxes were also introduced by state governments on sale of goods. At that point in time, there was no tax on service that was levied. But there were various challenges that we quickly realized when we were developing as a nation. Obviously, at that point in time, more focus was on the public entities or development of economic through public entities. But the primary challenge that we faced was that these different taxes at state levels with no uniformity were actually creating trade barriers among the state. In addition to this, one of the other primary challenge was cascading effect of taxes, because the central government was levying a tax on manufacturing which was called as excise duty. Now, at that point in time, India had not explored or experimented with what is today called as value-added taxation, where only on each level of transaction a tax is levied and the credit is provided for the earlier transaction. So inputs such as, say, a nut bolt that was being manufactured was getting attracted with some excise duty. That input was going into manufacturing of a machine which was again manufactured and on which excise duty was again being levied, and therefore there was a double taxation in the sense to the extent of the value of that nut and bolt. Same was happening with most of the raw materials. In addition to this, when these products were then going into the market and sales tax was being levied, then sales tax was also being levied on the excise duty portion, which is already included in the price of the product. So therefore, there was a cascading effect of tax to the extent that local taxes levied by a state were also being levied on the central taxes which formed part of the value of the goods. Similarly, the challenges were when the goods were moving from one state to another. Despite the fact that one state had already collected the tax, the other state were also wanting to collect the tax. And this continued till the time, when the central government came up with what was known as Central Sales Tax Act and came up with principle as to what would be treated as interstate sales of goods at that point in time. But this continued for quite a lot of time when, for the first time, in fact, in 1976, a specialized committee was formed, and it was left to that committee to decide what should be the, how should India progress in so far as its tax collection is concerned. Obviously, the references to the committee were multifold, including the tax base, etc. But it is for the first time that this committee analyzed the development of value-added tax in 60s and 70s in various European countries, and suggested that at least in so far as the tax that is being collected on manufacturing is concerned, which was excise duty, we should move to a value-added format where excise duty paid on each of the raw material would be available as input tax credit and can be offset against the output liabilities of excise duty on the finished products. And this is what was introduced in 1986 for the first time and was called as MODVAT, or modified value added tax. This continued for a short period on very small limited items, when in 1991 Raja Chalaiya committee again said that this is something which needs to be implemented on a broad base, and in fact excise duty completely need to move to a value added form at the central level. In fact, that committee also suggested that there is a need that there should be a harmonious rate of tax across the state for all kind of goods on the sales also, if we want to have India as an integrated market. And therefore, to that extent, if you know, that is the first idea of GST that was recommended by a specialized committee as early as in 1990s. Pursuant to these recommendations, how a law developed was that we moved from MODVAT to what was then called as CENVAT, Central Excise Value Added Tax. And this CENVAT then continued for a long period of time, at least at the central level, where for services as well as for goods, the input tax credit mechanism was incorporated. Now, similarly, for the state level laws, efforts were made that similar value added tax system should also come in the state, where credits are available on the raw material. On each level of value addition, the tax is collected. And for that, there was a committee of finance minister that was formed, which negotiated and deliberated a model VAT act at that point in time. And the idea was that each of the state, with minor modification that may be absolutely necessary in view of the local conditions, would adopt that model VAT act, so that there is a similar law on sales of goods across the country, and there are similar rates of taxes across the country, so that there is no market distortion and so far as the state to state culture is concerned. This was called as VAT, or value added tax, and this replaced existing sales tax. The first such implementation was in 2003, when state of Haryana actually implemented VAT. Despite these central taxes in form of excise laws, as well as the state taxes in form of value added tax, having moved to a value added format, there was still a lot of struggles actually in so far as the limitation of these laws were concerned. Now, the primary challenges that were there were, again, number one, cascading effect, because this cascading effect could not be resolved till the time state and center were willing to come together, and either the center was to allow credit of state taxes or state was to allow credit of central taxes. The way our constitution was drafted and the way the powers were divided between the center and states, it was not an easy task to achieve. and therefore businesses continue to suffer, where value added tax which was levied by state was continued to be levied on the excise duties that were collected at the center. In addition to this, what happened, that based on experiences of each state, they started modifying the rate of VAT. Now, there were certain goods, say for instance, steel. Steel was being charged at say 12% in state of Orissa and 5% in state of Haryana. Now, because of this distortion in rates of tax, obviously this started affecting the development of the state and which industry was coming up in which state. And therefore, tax rates became primary reason for the businesses to decide how the economy of a particular area would develop. In fact, state governments did use VAT also substantially to industrialize the states where industrialization was slow. They gave VAT reductions and VAT refunds to ensure that the industries would come up as an incentive. But obviously, this led to a distortion. And the primary reason is that in terms of tax policy, VAT per se was a origination based tax, or the sales tax or VAT were origination based tax, thereby meaning from wherever the goods were originating, tax was being collected by that state. Whereas per se, the policy of indirect tax is that it must be a consumption based tax. So wherever the goods are actually being consumed, that state should receive the tax. Based on these experience, actually, of one, cascading of taxes. Secondly, there being multiple indirect taxes. Center was levying excise duty, states were levying VAT, states were also levying entry tax, purchase tax, then there were octroys, and all these multiple taxes were leading to a lot of distortions and lot of difficulties for businesses, because then businesses were burdened with multiple compliances under multiple laws. And a lot of business decisions were based not on the business dynamics, but on tax policies of the states. This actually led to a need where a major reform was needed under the Indian laws. And this major reform in form of a single unified national tax was mooted as early as in 2010, when Mr. Vajpayee's government was there. And the idea was that states and centers should come together, and there should be a single rate of tax that should be applied on all goods and services across the country, so that there is no possibility of distortion insofar as the rate of tax across the states are concerned. And tax should not be a barrier insofar as companies doing business across the states are concerned. It should not matter whether the factory is set up in Haryana or it is set up in Orissa, and it should be a fair competition for all. Now, obviously, states showed a lot of resistance, because that meant that they had to give away their sovereign power to levy tax and sovereign power to decide what rates of tax are to be applied, and agree to the center levying these taxes and then devolving it on the state in terms of the constitutional framework. Because of this resistance, this idea could not materialize for many years. When in 2015, 6 onward, in fact 14 onwards only, when the NDA government again came back, they negotiated a formula with the state where some consensus could be drawn, and the formula for negotiation primarily was that, number one, this center agreed that whatever would be the loss of revenue for the state for next 5 years after the implementation of GST, the center would compensate the state for those losses. And in calculating such losses, the government would also consider substantial yearly growth on revenues on a notional basis. So they say that if your total revenue collection in this year is 100 crore, we will treat that year on year, this revenue will continue to grow by 10-12%. And we will check your actual revenue collection. Whatever is your loss, you will be compensated by way of a GST compensation, which would be provided. Secondly, it was agreed that insofar as alcohol is concerned and insofar as petrol, diesel, etc. is concerned, these would be kept outside the GST realm so that states still do have some independent power to decide the rates of taxes and manage their finances, at least insofar as these goods are concerned. Obviously, these two products or product categories per se were responsible for at least 50% of the state revenues at that point in time. So with this formula, a primary consensus was agreed between the center and the state. And then to further formalize it, it was agreed that a constitutional body, which would be called as GST Council, would be formed. And any decision that is to be taken with respect to change in rate or change in law, etc., would be taken by this GST Council. It was agreed that this council will form, each of the finance minister of each state would be the member of this council, which would be chairperson by the union finance minister, and there would be a voting system. If at all any state wants to change any rate, they will have to bring the proposal in this council. The council will vote on it, and only if it is approved by the council, the laws could be changed. With these negotiations and formula, first of all, the constitutional amendment was proposed. Now, why was constitutional amendment necessary? Obviously, as I discussed in the beginning, after independence, when the constitution was formalized, the power to levy tax on sales of goods was exclusively within the domain of states, whereas power to levy tax on manufacturing of goods was exclusively within the domain of center. The power to levy tax on services also was exclusively within the domain of center. Now, what was proposed is that a GST which would be in the nature of a dual levy. That would mean that each product, when it is sold, two taxes would be simultaneously levied on it, which one would be the central portion and one would be the state portion. And if you would have seen any invoice that you buy anything, you would see that it says CGST and SGST. CGST and SGST cumulatively are GST. But these have, because this was a dual design, where both center and state will have a share of that tax in each of that transaction. It was necessary that constitution is amended where both center and state are given simultaneous power to levy goods tax on goods as well as services. In addition to this, obviously, because a constitutional body in form of GST Council was to be introduced and various other ancillary aspects were to be considered, a constitutional amendment was necessary. This constitutional amendment was proposed. Once again, there was an initial constitutional amendment bill that was tabled in 2011 also, which had failed. But in 2014, 122nd constitutional amendment bill was tabled in the parliament, which was finally passed in 2016 with all this architecture in place to ensure that GST can come in. Pursuant to this constitutional amendment, obviously, various laws that were required under the GST laws were passed. The unique structure of the GST was that there would be one central Goods and Services Tax Act, which will govern levy of CGST across the country. Each of the state will pass us their local GST Act, which would be called as State GST Act, which will govern the levy of SGST portion of the tax. But this law would be absolutely identical to the Central GST Act, except for one or two minor provisions related to transition, which pertain to the continuity from the old laws. In addition to this, there was another act that was promulgated, which was called as Integrated Goods and Services Tax Act. Now, Integrated Goods and Services Tax Act, or IGST, was a tax that was to be levied on interstate transaction of goods and services. So if one person is selling goods sitting in one state to someone in any other state, in that situation, IGST was to be levied. The primary principle underlying GST was that GST would be a consumption-based tax, which would mean that if goods were moving from Delhi to Haryana and were getting consumed in Haryana, state of Haryana would retain the tax. And why this primary principle was necessary? Because our experience suggested states like Tamil Nadu, which were highly industrialized states, were rich state, despite the fact that most of the goods that were being manufactured in those states were actually going out and were being consumed in some other state. And those states were not really enjoying the indirect tax benefit which their consumers were bearing. A consumer sitting in Delhi buying a car which is manufactured in Tamil Nadu was actually paying full taxes, but those taxes were going to the state of Tamil Nadu. Therefore, principal policy decision of moving towards the consumption-based tax was necessary. Obviously, with the introduction of GST, it led to various benefits. First, obviously, was unity of taxes or integration of country through taxes. A single law that was now governing levy of tax on supply of all goods and services across the country, where tax rate on supply of goods and services across the country was same. There were no special exemption in any other states. There were no different rates in any other states. And there was no cascading of taxes also. It's not that taxes paid to center were becoming part of a transaction for paying the next level of tax. Number one. Number two, obviously, was the benefit in compliance. Earlier, businesses were doing 7, 8, 10 compliances under different laws. And in fact, if you look at big companies who were having offices in 28 states or 29 states and 7, 8 union territories, they had to comply with filing VAT returns in each of the state, filing excise returns, filing entry tax and purchase tax returns, and therefore the compliances were huge. So this single unified tax substantially reduced the compliances for the business and therefore led to economic integration in the sense of the country. And that is why, as Namita said in the beginning, this was a watershed moment insofar as the development of tax policy of India was concerned. It was unthought. Nobody could think that center and state would come up and pool their the powers and dilute their federalistic powers under the constitution to agree on a tax that would be jointly levied by center and state. In addition to this, while GST was being designed, the idea was to have an infrastructure which would make the tax very transparent. Therefore, from the very beginning, the idea was that GST would be highly IT enabled tax, where all filings, all compliances would be online and would be easy to manage. So this is how we moved to GST and GST became reality in 2017. Obviously, history interests us. There are so many stories which I have not touched upon. If, one can talk for days and days only on what were the recommendation of the committees, how the states negotiated, what went into the room where all these finance ministers were sitting and deciding. But that's all past. We have moved to GST. Obviously, GST per se as an idea was a very laudable, project which has seen the light of the day. Ideally, a single rate of tax and a single levy across the country would have been the most ideal structure. But keeping in mind the realities of the country, the polity of the country, I think we agreed on the best possible structure that was there. Now that we are here, I think it is important also to understand how does this law impact everybody in day-to-day life. Obviously, as a consumer, you go, you buy stuff and you pay GST on it. That is the simplest part of it. But as professionals, as entrepreneurs, as shopkeepers, there is a lot that we need to understand as to how GST would impact us. First, obviously, is the who is liable to pay tax under GST. Because per se, GST has attempted to broad base the tax and cover as many people as possible in the tax net. The law says that any person who is engaged in supply of goods within the state and the turnover of that person is more than 40 lakhs. And this threshold of 40 lakhs is reduced to 20 lakhs in special states, hilly area states like Uttarakhand, Himachal, Northeast states. There the threshold is 20 lakhs. If you are doing business of more than 20 lakhs in the special states or 40 lakhs in any other states, you are mandatorily required to take registration. Now, this is for goods. But if you are a service provider or a professional, then this threshold gets reduced to 20 lakh for normal states and 10 lakh for special states. So say, for instance, say you are a researcher or a chartered accountant sitting in Uttarakhand, and your total revenue in a year is more than 10 lakh, you have GST registrations, mandatorily obtain GST registrations, and then undertake necessary compliance, which we'll discuss. In addition to this, the law says that if you are engaged in interstate trade, that means that you are selling goods from one state to another. You are a shopkeeper in Delhi and you are supplying goods to a shopkeeper located in Haryana. This threshold does not apply to you. The registration is mandatory even if you are doing a 1 rupee transaction. And therefore, there are these exclusion where threshold rights are not available and registrations are mandatory. Now, once you have taken the registration, obviously there are multiple monthly compliances under GST law. You have to file what is called as GSTR1 return, which is basically you report your sales by 10th of every month, which is called as GSTR1. Then you reconcile your purchases and sale to see what is your total value addition and what tax you have to pay by filing a return by 20th of every month, which is called as GSTR3B return. And similarly, you have to then on an annual basis file an annual reconciliation, which is called as GSTR9 and GSTR9C. These are primary compliances which everyone is required to do, irrespective of the size of the business. The other requirements which may or may not apply to everyone is e-invoicing. Now, under the GST law, government has made it mandatory for the businesses to generate invoice through an e-portal that has been designed by the government. Now, this requirement, even though it started as mandatory requirement for companies who had turnover of more than 4, as on date, this requirement has been made mandatory for anyone who has a turnover of more than 10 crores. That would mean, and if you see at the ground level, 10 crore is not really a big turnover for even a small wholesaler sitting in Chandni Chowk. But the expectation of the government is that small shopkeeper in Chandni Chowk should have that kind of IT wherewithal to be able to generate invoicing through an online portal, which should carry a QR code mandatorily. And therefore, to that extent, there has been a lot of emphasis on technology and technology-driven compliances, which not only apply to big companies, but also applies to MSMEs and SMEs and is mandatory. Obviously, the last point is record keeping, but record keeping is something which was earlier also required, is required now also. It is critical under the GST laws to maintain proper documentation at the business, and there are penal provisions if you are not doing that. So this is insofar as what the current status of GST is concerned. Now, while GST is a substantial upgrade from our erstwhile tax laws, and it has substantially reduced the challenges that were being faced under the erstwhile laws. And I'll just tell you an example, a live example, just for you to understand how the old laws work. So we have a client, a big multinational client who makes potato chips. They have litigation in 5 states. In one state, under the VAT laws, these all litigations are pre-GST litigations. In one state, the state is saying chips are namkeen, and therefore the tax rate should be applied that of namkeen. In one state, there is a litigation going on that chips are nothing but processed vegetable because it is a processed potato, and therefore tax rate of processed potato is being asked, which is completely different. In another state, there is a separate entry for snacks, and they want it to be taxed under snacks. So these kind of challenges, where in 28 states you have 28 different kind of litigations and you have to carry them, obviously we are much better off than that. But it's not that the journey of GST has been absolutely smooth, and after 2017 businesses have completely changed and there are no challenges. There have been substantial challenges in GST also. And one of the biggest reasons for challenges under GST is complexity in the tax rates. While GST was being designed and deliberated, there was a revenue neutral rate committee that was appointed to identify what should be that single rate of tax that the government should agree and apply on everything, irrespective of the nature of the product, so that there is no confusion. And in fact, that committee proposed that we can have 2 rates, one for most of the goods and one reduced rate for special items such as food grains, etc., so that the burden of tax on poor is not that much. However, in order to deal with criticism of burden of tax filing equally to rich and poor, which as Namita discussed in the beginning, as has been highlighted in the auction report, what was decided was that all the sin goods, what is referred to as sin goods, is all luxury items, cigarettes, luxury cars. At that point in time, air conditions, refrigerators, TVs bigger than 32 inches, all of these were considered as sin goods, and a special rate of 28% was proposed on these goods. There were many items which one can argue is actually today a necessity, but they were all kept under 28%. Then there was a standard rate of 18% that was for most of the goods and services. Then there was a special rate of 12%, which was for items such as medicines. Then there was a special rate for 5%, which were again reserved for more critical items like food grains, etc. Most of the food grains were exempt, but say food grains in packets or other items of critical nature. Then there was a rate of 0.1%, which was kept for gold, etc. So there have been multiple rates that have been introduced in GST for the purposes for different goods, and there is a huge tariff which provides which product will fall under which tariff and what rate would apply. But what happens is when you have multiple rates, the dispute automatically starts. Like say, take an example of tires and tubes. When the GST came in, the rate on tire was different and rate on tube was different. And usually the tires and tubes are supplied as a package, at least at the OEM level, where manufacturer sells it to the car manufacturer for applying. And disputes are started arising whether tire and tube, when sold together, would be a composite supply attracting the higher rate, or they would attract their specific rate. And these kind of disputes became more commonplace as we have progressed from 2017, primarily on account of complexity in the tax slab, and therefore that is one of the biggest challenge that we face. The second biggest challenge that we face in the GST laws is the burden of compliance. The as I was discussing, because everything is online, it is expected that even that person who has more than 10 lakh of turnover in state of Uttarakhand, maybe sitting in a small district somewhere in Chamoli, has to have the ability to be able to file their returns online, manage all their affairs online, look at the notices online and reply to the notices online, which for big businesses may not be a very big deal, and big businesses obviously had all the infrastructure in place to be able to deal with it. But SMEs specifically found that there was a huge cost of this burden under GST laws, which led to a lot of non-compliances. Now, obviously, from 2017 till 2023, government has been very attuned to these issues, in the sense that from time to time they have come up with schemes where they have either waived off the penalties for these minor non-compliances, or announced amnesty scheme, or even relaxed compliances for small businesses. But this administrative burden still remains, because uh, in the scheme of things, if you see, businesses, the way they see themselves is that businesses having turnover of up to 50 crore today thinks that they are not very big business. They would not want to have a staff or two or three people just to deal with GST compliances. And therefore that remains a big issue still. The third issue is input tax credit, and input tax credit is the backbone of GST. We have touted GST is the best value added tax structure in the world, the most unique. Not that world has not seen the GST models, Australia, Canada, in fact, France has value added tax from long back. But we really take pride in the tax model that we devised in such a diverse country. And the backbone of that is input tax credit, because whatever I buy, I get credit of it, and whatever I sell, whatever tax is payable on that product, I can take the benefit of my input side taxes and pay tax only on the value added portion. If I am buying something for 100, selling for 120, I effectively has to pay tax on only on 20. Now, what happened was, the way the law was designed, law said you will buy something from X person will upload his return. Because his return is uploaded, that ITC will show in your ledger automatically. When you will sell it, that will be automatically offsetted from your ledger. And did not consider the fact that there would be people who would not comply. There would be people who would not comply on time. There would be people who will comply after 6 months and pay penalties and fines. But the way the law was designed, an honest bona fide buyer was being punished, or in fact is being punished, for non-compliances of a seller. And therefore this backbone of GST, which was the chain of ITC, gets broken if there is one rotten apple in the system. And that is today one of the biggest challenges that we have in the GST laws. Obviously, other than that, there are issues around fraud and evasion, government becoming very aggressive when it comes to, because a lot of fraud and evasion has happened. The officials have become very aggressive when it comes to honest taxpayers also, and when they come to inspect their books also. So that have also been a challenge that has been encountered in GST. Therefore, with this insight that we have and the challenges that we have seen, the question arises, where do we go from here, and what lies ahead insofar as the future of GST is concerned? Obviously, first and foremost is rationalization of taxes. There has been a lot of debate going on, and discussion goes on every time budget comes, that we should try and move to at best 2 rate of taxes on most of goods and services, and remove all possible exemptions that are there. It is necessary, as on date also, there are various items which are chargeable to 28% of tax. It doesn't make sense that you go and buy a TV above a specific length for your home and you have to pay 28% tax because it is considered as luxury. I think it is important that rate rationalization should happen. There has to be some balance insofar as how the burden of tax will fall on the consumer. But irrespective of that, keeping in mind the ease of administration in tax, rate rationalization is the necessary reform if we have to see this GST flourish further. Second, obviously, is the technological challenges that are being faced and how we can ensure that these technological challenges are met, where small businesses are able to fulfill their compliances without having substantial administrative burden of cost in fulfilling these compliances. It is not very difficult. If more and more automation and use of technology can make it easier, where GST systems themselves will be able to do most of the compliances and only some bit of checking or reconciliation would be required at the businesses level. Then for insofar as future is concerned, obviously the third important issue is supporting small businesses. Small businesses should not get so heavily punished for non-compliances that it causes sudden death of the business. What we have experienced in past is that, say for instance, a business has a small MSME has purchased goods from a large undertaking who insolvency and fails to file their last 4-5 returns. They have already collected the GST from me insofar as MSME is concerned. But because that large undertaking has failed to comply, my credit would be denied, and because that amount is so huge for me that it will cause sudden death to me. So all those issues, specifically with respect to smaller businesses, we have to find out the way where we can reform the GST laws further to ensure someone who has paid taxes to their vendors is not punished twice, and government takes action against the person who has failed to pay tax. Other than that, obviously tax friendly initiatives needs to be taken. The issues, the overuse and abuse of powers of search and seizures, power of arrests. We keep hearing GST officer arresting everyone merely on apprehension of tax evasion should remove. It is necessary that we foster more tax friendly environment, and the government's policy are based on an assumption that every taxpayer is an honest taxpayer, taxpayer is a thief. And then insofar as future of GST is concerned, the last point is aligning our laws with the global laws. If we look at UAE laws, Australian laws, Canadian laws, there is still a lot of scope that is there insofar as aligning them with Indian laws. There are a lot of interpretation issues around IT, ITS sector, BPO, intermediary services, export of services, where we need to make our laws simpler and clearer so that it can effectively boost the industry and does not become an impediment in the industry. So this is as far as we have for the presentation today. Namita, back to you. And if anyone has any question, take that.
Thank you. Thank you very much, Sandeep, for this very simple but detailed presentation of the past, present, and future of GST law. So if there are any questions in the room, we have some questions already on Zoom. Yeah, Manas?
Thank you so much. Thank you so much for the talk, sir. I have 3 quick factual questions, if you could clarify.
Sure.
The first one is, you mentioned how distortions existed in the previous system and how, let's say, the example of steel being taxed at 12% in Orissa and 5% in Haryana. Apart from the distortions of economic benefits that states would have, were there any other types of distortions that existed in that? But if there are examples regarding that. The second one would be, once the tax system changed from the earlier one to GST, and now there was a sharing between the center and the states on various goods, wherein earlier it was about sales tax being for the state, while service and manufacturing being for the center. What was that transition like? Because that would have left a lot of financial ups and downs between the state and the center. And how was that dealt with? And the final one, sir, the when it comes to the future and supporting small businesses and not having them heavily punished for compliance offenses, so there needs to be a balance that should be maintained between exempting them from penalties and preventing fraud. This abstract idea, how does it look in policy, like specifically, if there could be examples of that? Thank you so much.
Thank you so much. I think all of them are very important question. Insofar as see the example, there are hundreds of examples of distortion if we talk about the erstwhile laws. In the erstwhile laws, depending upon the state, there were certain goods which were completely exempt in certain states, whereas they were taxable in other states. Then distortions were in form of the VAT schedules. So the rate of VAT was prescribed under VAT schedules, ideally in terms of the negotiation that had happened between state finance minister in the empowered committee that was set up in 1999 before VAT was introduced. Ideally, each of the states should have followed the Model VAT Act and the schedule to the Model VAT Act so that the tariff would have remained the same. But states started amending those tariffs where, as I said, some states have entries such as snacks, some states have entries such as namkeen or processed vegetables. And this, obviously, all these differences in the law. See, primary reason for all those distortion was lack of uniformity in the law and in the rate of tax. Because there were multiple goods where there was no uniformity either on how the law would apply or what would be the rate of tax. This led to a lot of litigations and disputes. So that's the first bit of it. The second aspect insofar as transition is concerned, definitely transition was a very difficult time. Transition was a difficult time for businesses as well as for the states. For businesses, because it is not easy to overnight shift to a completely new law, specifically when we were earlier also under a value added system where state level value added tax were also there and central level value added tax were also there. And there were a lot of credits that were still lying around, lot of goods that were available in the factory on which old taxes were paid. But the laws contemplated that transition, and there were specific transition provisions that were incorporated under the GST laws. Those transition provisions provided that the taxes paid on under erstwhile laws were to be carried forward under the new law and were to be adjusted from the liabilities that were to come through in the GST laws. Obviously, it led to a lot of litigation because there were many cases where these credits were either denied because of procedural non-compliances. There were challenges because the system was not up to date and the website would hang on the last date. Hundreds and thousands of writ petitions were filed across the country. Finally, the issue reached Supreme Court, where Supreme Court then in 2022 granted final opportunity to everyone to again go and file their transitional claims if they could not file it because the system was not working on the last day or the documents were not there. So those were the challenges on the side of the businesses. And these were, only the tip of the iceberg. There were challenges insofar as ERP systems are concerned, whole accounting systems were to be changed, new GST returns for all big corporations, how they would be filed, etc. All of those challenges were there. Insofar as states were concerned, yes, insofar as their ability to determine what would be their total revenue collection, etc. is concerned, it was impacted initially, but they had a guarantee in form of GST compensation that was to be recovered specifically by levying GST compensation cess on certain articles, luxury goods, etc. So to that extent, yes, there was lack of clarity, but there was always this guarantee that was available that the center is going to make good whatever deficit or loss that these states would have had. On the administrative side also, there was a lot of challenges insofar as the tax administration, which have had years and years of training under the erstwhile law, was to be trained and made adapt to the new laws so that the new tax administration should continue with the same officers. So these were primary challenges around the transition laws. Sorry, what was your third question?
Regarding the balance that needs to be maintained between preventing fraud and,
yes.
and
Oh, yes.
having
I think that is a very, very good question. And that is something which is the most debated topic if you see insofar as at least policy initiatives around GST is concerned. And my personal view, and it has always been my view, is that the biggest challenge with Indian tax policy has always been that the law moves with an assumption that taxpayer is a thief. All laws are drafted according to it. It moves on an assumption that people will try to evade taxes. And that is where the problem is. Definitely, I think in last few years, at least in the last decade, there has been a lot of resolve to simplify the laws, decriminalize the law, and make them more and more simpler. But that policy overhang always remains, and it is not an easy overhang to shred. It is important first that the lawmakers of this country and the people who implement those laws will have to accept that most of the taxpayers are willing to and want to comply the law. Once that policy initiative is there, then the laws are drafted in a manner where cumbersome compliances are not enforced. Why is it there a need that you must have a invoice reflected in your online return before you can take credit? Because government thinks that there are people who will take credit even when they have not purchased the goods. That is the policy thought process before bringing that provision. So once you move to that simplification of assuming that everybody is an honest taxpayer, these onerous provisions will automatically go away. Yes, there would still be some people who would try and evade taxes, take advantage of it. It is better to focus the administrative resources and energies on tracking and dealing with these people using AIs, risk management tools, rather than making the law onerous for everyone else.
I can just add to that. I mean, that's a very interesting observation that you have. So, I gave the talk on property rights in November, where I traced the history of property litigation with respect to the fundamental right to property, which has now been abolished. And contrary to the popular conventional wisdom, actually, there is the narrative that we read in law school, right? That, most of the cases were about rich zamindars, and that's why the property clause had to go. But actually, land reform cases were only 20% of the total database. And the second significant number of cases is taxation cases, which is how I first got interested in this area. And it totally bears out what you're saying, because most of these cases, litigants are winning. So again, we don't have research on the entire data set of land cases. This is the first property cases. This is the first sort of attempt on that. But for example, we did in the research on a land acquisition report where we looked at all Supreme Court cases on land acquisition, we found that litigants were more likely to win than lose against the government at every level of court, from High Court to Supreme Court. And that is because of these inbuilt assumptions and biases in the policy itself, which lead to certain laws, and then the enforcement of those laws in this very penalizing fashion, and then leads to litigation.
Very true. In fact, Supreme Court has observed it multiple times now that government of India is the biggest litigator.
Yes.
Right? And a biggest chunk of those cases are tax cases where even an SSC has gotten a favorable order from an assessing officer or at the appellate authority. It is very likely that the government of India would challenge it. Some of it is bureaucratic reasons, because the officer who is sitting on top doesn't want to take the risk of his file being opened in audit, he said, let the Supreme Court decide finally. Why should I take a call or drop this? Yes, a lot has happened on that count because now there is a policy that the government of India has that it would not appeal cases above below a threshold, right? That threshold used to be initially 25 lakh, 50 lakh and 1 crore. Now it has been increased to 50 lakh, 1 crore and 2 crore. When I say 50 lakh at the tribunal level, 1 crore at the High Court level and 2 crore at the Supreme Court level. That means if the case involves a tax dispute less than that amount, that appeal would not be carried forward by the governments, which obviously has substantially reduced the tax litigation. Then obviously in last few years, government has come up with Vivad Se Vishwas scheme, Sabka Vishwas scheme, and all of these schemes are basically tax amnesty scheme where the government has given opportunity to close all legacy issues. So to that extent, yes, it has helped a lot in reducing the tax litigation. And I'll say with some honesty that yes, I see that there is a lot of effort to get done with all those past legacy issues that we have. But future also, till the time the mindset of the drafters, the policy makers with respect to tax evasion would not change, it would not, they would not, we would reach the same situation in next 20 years. And I see where it comes from. All these policy makers have either been bureaucrats who have served as commissioners, chief commissioners, or IAS officers or DMs from maybe starting from 60s till 90s, 70s till 90s and 2000. And their experience of the past is that everybody was trying to evade the taxes. And that policy paradigm shift has to come if we have to move to GST, which is way simpler insofar as compliance is concerned and less onerous specifically on smaller businesses.
Yeah. So I have some questions on that, but I'm going to pause and take some questions from our Zoom audience that has been listening patiently, which relate to the compliance issues that you raised as well. And, so the first question is, how debilitating is the delay in reversal of GST input credits? Most small entrepreneurs one speaks to talks of how processing this results in red tape and causes liquidity issues. Is it universal or are these only anecdotal? That's the first question. I'll ask a couple of others.
Sure.
Given that the budget is around the corner, what should be our government's focus with respect to GST? Given the fact that 55th GST Council meeting has spoken about differential taxing of popcorn, health insurance, old vehicles, or fortified rice, could you please explain? Maybe you can answer those two and then.
Yeah, sure. So first of all, insofar as ITC reversal and ITC related issues are concerned, as I said, in my challenges, the challenges that I discussed for GST, that is one of the very critical issues. It is a real problem. It is a specifically bigger problem for MSMEs because large companies still have the ability to have their contracts drafted in the manner where they do not release the payment of the vendor only till the time the ITC is reflected on the portal and they are able to take the credit. But smaller businesses do not have that kind of ability and therefore they do not have any tools provided by the government to see whether they are working with a vendor who is a very compliant vendor who is regularly doing the compliances for last, there is no rating system for vendor also, which was initially proposed when GST came in. To that extent, denial of ITC or any dispute on ITC directly impacts the working capital requirement of a business and make them less or more competitive depending upon how their GST compliances are there. And when we were, working on the GST drafts, the idea was we have to draft a tax law which would in no manner decide business strategies or business, competition for the businesses. If you have a law where a bigger company having better ability to manage compliances have an advantage of us over a smaller company because they may have a larger working capital requirement because of these GST challenges, that is something which was not the idea of GST. And to that extent, it's a real problem. It is not anecdotal. It is something which we see our clients facing on day-to-day basis. Government as well as the courts have tried to come to rescue, but there have been amendments in the law also where the government has relaxed some of the provisions for the past periods. But I think a thorough look at the law is required in order to do away with these issues.
So there's a related question to this one, which is that, okay, these are the challenges. What is your solution to these challenges, if any?
Yeah, obviously, the easiest solution is to work with vendors who are compliant, ask for, ask for their compliance report, check their compliances online to the extent it is available to be checked. But that may not be enough. I have seen enough fraudulent entities who have created fraudulent forms, taken registrations and shown compliances, raised invoices, take GST payment and run away. So obviously one is try and work with compliant people. Second is if you're working with businesses where you have the ability to enter into agreement, which include clauses for indemnification if your GST credit is denied due to their non-compliances, ensure you have those kind of agreements. But again, those are all post facto issues which may or may not really help everyone. The underlying disease will have to be cured rather than finding these, things to remove the symptoms.
The second question, which is the 55th GST Council meeting.
Yeah,
what
okay.
is-
So insofar as
should be the
budget
government's
and GST is concerned, we have to understand now the design of GST is such that any decision on change in GST structure, GST rate is not a purely union issue. It is an issue that is to be deliberated between union and states in a forum called GST Council. And therefore, usually you would see there are no big announcement around GST insofar as budget is concerned, unless there is already a GST Council decision taken on that. Union budget can only obviously announce things where states and center are already ad idem on what is to be done. So to that extent, I do not see a great deal of proposals in the budget around GST, at least not beyond what has already been discussed in the GST Council. We keep hearing a lot of proposals that the government may place before GST Council for tax rationalization, including rationalization that have already been discussed in the 55th GST Council meeting, rationalization of legal provisions. But I think that is something which would be for a later day.
So there are a couple of specific questions about particular
Sure.
products. Why are petroleum products still outside the purview of GST? That's number one. And the second is that levying of GST charges on minor forest produce puts the forest right holder onto the verge of financial marginalization. Could you talk a little bit about the legality of GST on minor forest produce? So petroleum products, why are they not? And minor forest produce, why should there be GST?
Okay, so two things. Number one, insofar as petroleum products are concerned, the primary idea to keep them outside was negotiation between center and state to ensure that the states would agree to introduction of GST. It was agreed that for the first 5 years, petroleum products will remain outside, and after that, the product would be bought within the GST regime. That has not happened because there is still no consensus between the states insofar as what would be their revenue loss if the product is introduced in the GST. I understand that there is a discussion going on. In near future, it is expected that in near future, petroleum products would be made part of GST. But insofar as the timeline is concerned, it is very difficult to give a timeline because it is more of politics rather than the law. Insofar as taxability of forest produce are concerned, see, most of the products which are agricultural product have been kept outside the GST regime so long as they are unprocessed product. Right? But there are certain products which are sold after some processing, which are chargeable to tax. Insofar as the challenge to such levy of tax is concerned, the courts have taken a consistent position that a decision of the government to levy a tax on a particular product is a policy decision. And such policy decision is usually not open to judicial review under the writ jurisdiction unless there is something grossly arbitrary about it. So I believe if there is any specific product on which an industry wants to challenge, it is not an easy challenge, and court is very unlikely to hold that this product, charging a product to tax, is unconstitutional. Courts may definitely direct such a writ petition to be considered as representation by the government, and any such decision of taking any product outside the realm of taxation, it would primarily be a policy decision which the government will have to take.
Are there any other questions? Yeah, Sandeep.
It was a very interesting session. Thank you, sir. I wanted to ask, building on how Namita ma'am mentioned about the Oxfam report, right? And I think it's very relevant, the kind of inequality that is happening, right? So now, as you have mentioned about the sin taxes, the luxury goods and all, on the flip or better side, I think there's also another policy on rare diseases. So now, how does this policy for rare diseases interact with India's indirect tax system, and maybe in terms of exemptions or reduced rates on medications and treatment for rare diseases? And I think there's still a delay in its implementation, so I wanted to know how it operates. Yeah, thank you.
See, okay, insofar as the GST on pharmaceutical products are concerned, not all pharmaceutical products are exempt from GST. And the primary policy logic of that is that when a product is manufactured by a pharmaceutical company, there are hundreds of inputs that go in. All those inputs are taxable. If they are buying plastic wrapper for wrapping it, or white powder for coating it, everything, including machines, rentals, everything is GST is charged on that company. If that product is exempted from GST, all those inputs would anyway become the cost because they would not be allowed to be refunded to them. And there would be some base of GST cost already involved on it. The easier way in a VAT kind of a structure is that you reduce the rate of tax on that product to an extent that the company would be able to offset its indirect taxes or input tax credit, and no additional burden is passed on the consumer. With that policy, the government has kept medicines usually in 12% or 5% category. But for rare diseases or diseases where the government thought it was specifically where product is being imported from outside India, those injections which are expensive injections which are not available in India are being imported, government has come up with certain exemptions. And on case to case basis, they keep reducing the rate. If you would have read the newspaper very recently, there was some bit of discontent around medicine for cancer, which was attracting tax at the rate of 12%. And government has reduced it now to 5%. But I think giving a zero rate or exempting any medicine would not achieve the objective of bringing the price of that product down, because that 5% tax is being paid through that input tax credit that is running in the chain. And therefore, to that extent, it may appear that having a 0% rate would be beneficial, but it may not be. But there are definitely areas where GST is being levied as of now in the medical sector, which was not necessary. It is not really generating great revenues for the government, and unnecessary complicating things for a common man, such as room rentals in hospital. Absolutely not necessary. I don't know how much of revenue I cannot at least foresee that government is making more than 1,000 crore of GST on all of that. It's a very small number in keeping in mind the things that, the government is doing. It is unnecessarily becoming the bad name, should have been removed. But yes, as far as rare diseases are concerned, special medicines are concerned, there are special exemptions available. If there are certain products which are not exempt and government is given a representation, government is exempting those products also.
Another question from our Zoom audience. Is it time for the compensation cess to be removed as the 5 years are over and the pandemic impact is also behind us? And if there are any other questions in the room, we can take them now.
I think insofar as the compensation cess is concerned, the idea was that it would go away within 5 years. By the time the 5 years period was to get over, COVID came in 2020. Between 2020 and 2022, the recoveries of the taxes went down and then came up. In order to be able to compensate the tax, certain loans were taken by the states, which are now to be paid off through compensation cess. It is expected that those repayment of those loans that are given to the states would be over, if I recall correctly, sometime in 2027, and it is believed that after that, the compensation cess should go away.
So while we're almost out of time, but I have a couple of questions.
Sure.
So the first is actually about the difference in the slab for the smaller hill states. I mean, would it not be more onerous? It's actually like 10 lakhs for professionals in the hill
So
states.
I'll tell you what was the policy perspective around it. Giving a higher threshold of exemption in the smaller states would have meant that a larger population would have gone out of tax net.
Right.
So the tax base would have been smaller, and therefore it would have impacted the total revenue collection of the states. So the idea was that in the smaller states, in order to ensure that there is a larger, broader tax base, this threshold was reduced from 20 to 10. Yes, it has an impact of more and more smaller people being required to take registrations, being required to comply with the provisions. But for that, government has, for small businesses, come up with something which is called as composition scheme, where they pay a flat rate of tax of 1% and do only one annual filing. Most businesses are not taking advantages of it because of the lack of credit chain in that model. But you're right that smaller state would have expected higher threshold in the scheme of things, that the ability of the businesses in smaller states to comply with highly IT oriented solutions would be lesser.
Exactly.
But there are no equities in tax.
But so that brings me to my second technical question. So you mentioned if you are a professional who is doing any or a person who's selling goods who is engaged in interstate transactions. So what about this? The same rule applies. You have to get a GST registration, and that applies also to international transactions, right?
Correct. So anyone who is first of all, import and export transactions are treated as interstate transactions. So therefore, the law applies if anyone is engaged in dealings either interstate or inter-country. There is a mandatory requirement to take GST registration. Insofar as services are concerned, which may qualify as exports of services, the benefit of exports can only be taken once the compliances under the law are done. Therefore, even though there may not be any GST liability to pay, registration and compliances may still be necessary.
Thank you. You mentioned about the use the fact that the government thinks of taxpayers as essentially trying to evade taxes, and therefore under the GST they have a variety of these set up this unit called BIFA, which is doing this kind of structure, etc. So, in your experience, the kind of prosecutions that are launched using these kinds of tools, do you find that they have a better rate of success, poorer rate of success? Do you see any differences across states in how they're using these kinds of new tools that have become available for sort of monitoring and prosecution and so on?
Sure. So, first is on the policy. Obviously, as I said, insofar as the drafters or the policy makers are concerned, yes, there is a presumption which I believe, and obviously it is my completely personal view, needs some change. Insofar as the powers that are provided to the tax administration officers, including power to search, power to arrest, etc., are concerned, it is not that in all cases those powers are used incorrectly or powers are used merely to arrest honest taxpayer. But it would not be incorrect to say that there are definitely some cases where it was not necessary for those tax officers to use those powers, and those powers are simply used because those powers are easier. It is easier for the tax officer to use those powers and coerce the recovery of tax, which otherwise taxpayer would have litigated and taken to court. So in any law which provides powers to the tax officer in the nature of arrest, etc., it is necessary that there are substantial checks and balances. When the GST law came in, it is not that under the erstwhile law they were not power to arrest. Power to arrest was still there, but they were used in only rare cases. When GST came in, the arrest started happening left, right, and center. And obviously, when in those cases also, where a company, established company doing business for 20 years also was facing threats of arrest because some of their vendors were non-compliant. But based on the representation from the industries and taxpayers, government has taken certain steps. They have introduced circulars and instructions for the officers as to how these powers are to be exercised. In addition, courts have also been very vigilant. In fact, very recently, only Delhi High Court in one of the cases mandated that it is necessary that detailed grounds of arrest are first recorded and provided to the SSE, so that when he is produced before the court for remand, he can object to and challenge the grounds of arrest. So all those checks and balances have in the last 7 years have come in, but there is still a lot that can be done in so far as coercive powers of the tax officer and bringing in clearly as to when those powers can be arrested, especially in a case of such where the officer will come in the night and say that you either pay tax or I will arrest you. If sufficient checks and balances are built in to ensure that no recovery can take place in the such proceeding, and any tax that is required to be deposited even voluntarily also will be deposited after 1 week of search, I think a major problem will get solved.
Is it the case that courts sort of occasionally tend to take evidence that is generated by these IT kind of structures? So if some computer program has thrown up some taxpayer as being a possible evader, is that kind of identification given more weightage by the courts than when the actual sort of assessing officer is supposed to think, or do the courts prefer to be assured that some human intervention took place before? Because there's neutrality. In some sense, you can say the computer program is neutral, and therefore I should rely upon it more, versus assessing officer essentially has some kind of human oversight and is making sure that the computer didn't make mistakes. Is there anything in the case law that's?
No, so,
that you
I think that's a very interesting question, very evolving issue. If you will see today, most of the searches, etc., under GST laws, and in fact in other areas also, are based on risk assessment tools that the government is using, and most of these tools are AI generated tools where data throws up names of people and put them in red flag category, and then searches are done on it. Insofar as courts are concerned, courts do not take any such computer generated risk assessment report on face value unless there is some cognitive analysis involved of a natural person who analyzes the documents and comes to a conclusion that the risk parameters highlighted by the program are actually correct. No prosecution can be initiated against that person or upheld by that person in the court. Now, obviously, as of now, there is no direct case law on it, but there are various situations where government is using such system generated tools, and the lawyers are opposing it, saying that a cognitive analysis is what assessment or reassessment is. The law does not contemplate assessment or reassessment by machines. It contemplates assessments or reassessment by officers. Change the law, say that an AI will do my assessment, and then it would be a different thing. Maybe in future we'll reach that situation where assessments would also be through AIs, and then maybe adjudication of disputes and justice will also be delivered through AI, but not today. The
Yeah.
faceless only means that it is through virtual mode, but there is a person behind the screen. The purpose of faceless is that you do not need to know the name of the officer and where he is situated, and the objectives of that faceless scheme is very different. While the government would never say in the object clause of why they want it, but everybody knows why they want it. They want that the SSC should never meet their officer, but there is always an officer.
From a human rights standpoint, that sounds very worrying because as we know that even if courts are providing that recourse, the process itself is the punishment because of the delays with the courts and the fact that we have these criminal penalties and so on. So I mean, it is not a sufficient safeguard that courts are providing those kinds of directions if these coercive powers are built into the law. I think we need to sort of fix them in the law itself.
I think you said it very well. Process itself is a punishment insofar as criminal law prosecution in India is concerned, undoubtedly. And I'll give you an example. I know a very young boy, 27, 28-year-old, was working in a company on 17, 18,000 rupees salary, was lured by someone else for a better paying job, joined and said that you will be made a director in the company. You will be the now director. You will be paid 30,000. And he was happy and he was enjoying. Company, he was made the director. Bank accounts were opened in his name. Hundreds and thousands of crores of GST fraud was done in his name. That poor fellow had no idea. Now, obviously, he's suffering. He's been to jail. He was arrested. He remained inside. After spending substantial time inside the jail, he got bail, and he now has to face trial, which will go on easily for next 10 years. So for him, even if he was to come out clean and able to explain that he has nothing to do, no financial benefit, he was merely a salaried employee whose documents have been misused by masterminds. These 15, 20 years of trauma that he will face insofar as appearing in the court on every date because he's out on bail is sufficient punishment. And unfortunately, unless we were to have a situation where our courts were to become less decluttered, we have double or triple the number of judges, that is not going to change.
So it all sounds very worrying also because we know that the technological systems they are not foolproof because there have been lots of issues in terms of identification of beneficiaries and so on. So adding coercive powers on top of that makes it very, very worrying on the one hand. The other thing that I want to just mention here is that one nation, one GST. We are hearing a lot about we had a talk on one nation, one election as part of the legal history speaker series on elections and election financing in India. we have already talked about how there are inequities with the hill states when we have this kind of centralized framework. So, within the constitution, we have opted for a federal structure precisely because of this idea that we are a country which is very diverse, and while there is unity in diversity, but at the same time we have to ensure that that diversity and is preserved and those inequities are not there. So apart from this sort of mindset of treating the taxpayer as a thief, what do you think of this mindset of moving towards one nation, everything, centralization?
I think one nation, one election, obviously that's a very different topic, quite political, and I have very strong thoughts on that, but I think that's for some other day. Insofar as tax laws are concerned, uniformity is something which is need of the hour. As much uniformity as possible, because without there being uniformity in at least tax policy across the country, which not only includes uniform rate of tax, but also uniform application of laws, it is impossible today to do business where the whole nation is market for you. Think about a scenario where today, somebody sitting in Himachal is running an e-commerce business and selling goods to everyone across the country. If he had to comply with 20 different state tax laws and know what would be the correct rate of tax possible, it would be impossible in this today and age. So for the purposes of economic integration of the country, it was essential that we have a uniform and harmonious tax law. And to that extent, to a great extent, GST has been able to achieve one nation, one tax. Obviously, it has a lot of shortcomings. It has had a lot of teething troubles, and government has done a lot, and a lot more can be done to make it a success story.
Thank you so much, Sandeep. I think we can, have several hours of discussion on this very complex law, but I think you've managed to cover a lot of ground in a very short space of time, both in terms of the technicalities, but also the broader tax policy frameworks and the historical evolution and the challenges for the future. I'm sure, maybe we'll have to get you back. I believe that there is a proposed change in the direct tax code of the country as well. So, not only have we, in terms of transformative laws, we are apparently going to repeal the current income tax laws in this budget session and come up with a new direct tax code. So there's going to be many more conversations about taxation in the coming days as part of the Legal History speaker series. But I think for now, we can all just join together, and thanks, Sandeep, for
Thank you so much. Thank you so much. Thank you.